Okay, let's dive into this. Picture just for a second the sheer, massive scale of the global economy. Every single day, millions of businesses are out there. They're buying raw materials, selling finished goods, hiring new folks, expanding into totally new territories. I mean, it's a relentless swirling storm of transactions, negotiations, and financial exchanges. It's incredibly chaotic, super fast-paced, and honestly, it can be pretty overwhelming just trying to wrap your head around it all.
Which brings us to probably the most fundamental question we can ask about the modern economy. How do we track all this chaos? Seriously, if billions of transactions are happening every single day, everything from your local coffee shop buying milk to some massive tech giant acquiring a startup, how do we actually make sense of it all? How do we make sure all that raw, messy data doesn't just evaporate into thin air? Well, we need a system. We need a way to track and communicate this activity universally.
And that's exactly what we're breaking down in today's explainer. We use a language, specifically the language of business, accounting. Just like French or Japanese or even Python code, business has its very own vocabulary, its own grammar, and its own syntax. If you really want to understand how a business is truly performing, you can't just look at their flashy marketing or their cool new product. You absolutely have to read their financial story. And accounting? Well, that's the language that story is written in.
At its absolute core, accounting is the systematic process of identifying, measuring, recording, and communicating financial data. Think of it kind of like a giant funnel or a pipeline. On the intake side, you've got this raw, unstructured reality, crumpled up receipts, messy payroll spreadsheets, massive invoices, the works. Accounting is the engine that pulls all that messy data through the funnel, processes it, and pushes it out the other side as clean, organized, and totally actionable insights. It literally transforms chaos into clarity.
To really grasp the depth of this, let's look at the official definitions that basically built the field. First up is the American Institute of Certified Public Accountants, or the AICPA. They define accounting as the art of recording, classifying, and summarizing financial information. Now wait a second, notice the specific word choice there. They don't just call it a science, and they definitely don't just call it math. They specifically call it an art.
So why an art? Well, because accounting is not just about mindlessly punching numbers into a calculator. No way. It requires deep professional judgment, careful interpretation, and some highly specialized skill. The business world is infinitely complex, right? Standard rules actually have to be applied to highly unique, real-world scenarios. A professional has to look at, say, a super complicated lease agreement or a multi-year software contract and use actual human judgment to figure out exactly how that translates into the official financial record. It takes a true craftsman to get that right.
The AICPA definition also gives us this brilliant functional pipeline to follow. Step 1 is you record. This means capturing the raw data exactly as it happens, getting it down in the ledger. Step 2, you classify. So you take that massive, jumbled list of records and you organize it into logical groups or folders. Think of it like putting all the equipment purchases in one pile and all the electricity bills in another. And finally, step 3, you summarize. You take those classified groups and distill them all down into clean, high-level financial statements that anyone can actually read and understand.
Now, what's really interesting here is the ultimate filter that governs this entire pipeline. The golden rule is that everything must be expressed in terms of money. And guys, this is a ruthless, absolute filter. If a transaction or an event simply cannot be assigned a monetary value, it never even enters the accounting system. Like if a company has off-the-charts employee morale or this incredibly visionary CEO, those are fantastic things for sure, but you can't accurately measure morale in dollars and cents, so it gets filtered out. Only the quantifiable financial truth makes it through.
Let's see how this builds when we look at another foundational perspective. The American Accounting Association, or the TRAE, offers a slightly different but super complementary definition. They call it the process of identifying, measuring, and communicating economic information. Did you catch that? Notice how they put a massive emphasis on that final word, communicating. While the AICPA focuses heavily on the nuts and bolts of how we organize the data, the AICPA is laser-focused on the actual end goal of having that data in the first place.
So the crucial point here is the whole purpose behind all of this work. The AICPA states that this communication exists to permit informed judgments and decisions by users. You see, accounting doesn't just exist in a vacuum. We aren't doing all this tedious work just to create static records that sit gathering dust in some basement. We do it to drive action. We do it so managers can actually decide whether to open that new factory, and so investors can figure out whether to buy a stock. It is literally the ultimate tool for reducing uncertainty in the business world.
Armed with that foundational understanding, we really need to address something that trips up almost everyone, from brand new business students to seasoned corporate professionals. What is the ultimate corporate vocabulary mix-up? Well, it's a trio of words that sound almost identical. They are constantly used interchangeably in casual conversation, yet they actually represent completely different levels of the financial architecture. So let's untangle them once and for all.
Let's start at the very bottom level, the absolute foundational unit, the account. An account is simply the structural destination where data lives. It is a single, specific record that's used to track the ups and downs, the additions and subtractions of one distinct item. You have a cash account, you have an inventory account, you have an equipment account.
To make this a bit more visual, imagine a single digital folder on your computer desktop, or even a physical bucket that just fills up with cash symbols and then empties out when you have to pay bills. That bucket is the account. It is highly specific, it's completely contained, and it serves one singular purpose. It is literally just one single folder resting inside a massive corporate filing cabinet.
Moving up exactly one level, we get to accounting. This is the active verb of the financial architecture. Accounting is the continuous, day-to-day work, the methodology, and the active process of capturing, analyzing, and reporting those transactions. It is the living, breathing workflow that actually keeps the whole business running. And this brilliantly illustrates our analogy. If the account is the static folder just sitting there on a desk, accounting is the dynamic action taking place all around it. Picture an animated character actively sorting through those folders, analyzing the data inside them, crunching the numbers on a calculator, and typing out the final financial reports. Accounting is the human effort and the system in motion.
Finally, zooming all the way out, we reach accountancy. This is the massive umbrella over everything else. Accountancy is the profession itself. It's the academic field of study, and most importantly, it's the theoretical and ethical framework that governs exactly how accounting should be done. This is where massive rulebooks like GAAP in the United States or IFRS internationally live. It dictates the boundaries of the entire art form.
To complete our visual analogy here, if the account is the folder and accounting is the act of sorting those folders, then accountancy is the grand library building that houses absolutely everything. It is the structural architecture, the walls, the foundation, and the rules of the library itself. It's the overarching environment in which the accountant operates every single day.
Let's lock this in with a quick mental cheat sheet. I like to call it the golden rule. Accountancy is the profession. It's the field of study and the rules. Accounting is the process. It's the practical workflow and the action. And an account is the record. It's the specific unit where the data ultimately rests. If you can just keep these three distinct in your mind, you are already miles ahead in understanding how financial architecture is actually built.
So the definitions are completely clear, and the vocabulary is officially mastered. Mastering these basics is exactly how you begin to speak the true language of business. But here is a final thought I want to leave you with. If accounting is the traditional language of business, what happens when artificial intelligence and digital currencies completely rewrite the dictionary? Will the art of accounting eventually be lost to algorithms, or will human judgment become more valuable than it has ever been before? Definitely think about that the next time you look at a company's financial story. If you found this breakdown helpful, hit that like button, subscribe for more deep dives into the mechanics of finance, and I'll catch you in the next explainer.